Chris Verrone, what is out there is a desire for catharsis, a VIX of 40 and the 8 other shades of it as well. It's not out there, but what element of the market last week gave you a sense of catharsis?
Well, what I thought was most interesting about last week, it was a good week for stocks, but what led? What's the only sector
to me the real yield,
a new relative high versus the S&P? Was energy. Energy still leads. And this is what's really interesting. On both down weeks and up weeks, your leadership really hasn't moved much. So I think, if you look at where the positioning still is, and I would contend there's still a lot of positioning at, quote, the top of the market, the Apples and the Teslas and the Microsofts. Energy outperforming doesn't help that group. So I'm not sure a lot changed from a leadership perspective, which is more important to us whether the next 200 S&P points is up or down if the leadership doesn't change.
And with technical analysis, does quality matter, whether it's quality small cap, quality large cap, profitable companies showing EBITDA down the income statement? Does that matter right now?
Well, I think that was the other message from the market last week. When you look at really what didn't move or didn't rally, what I would still call the garbage basically didn't bounce. I mean, things like Carvana or Roku or names that have basically were the speculative darlings of the cycle, which were thrown out. Those didn't move last week. So I think the market continues to make this very clear distinction between what is quality and what is not quality. And I think ultimately, what would be bullish from here? I think the market disassociating itself from things like Bitcoin or ARK or the IPOs, that I think would be a bullish development. That had to happen in 2002, if you remember. As we kind of came out of .com, the market had to disassociate itself with a lot of the garbage from the prior cycle.
I got to say, Chris, right now the headline is that Roku and Carvana are garbage, according to Chris Verrone of Strategas. I don't know that that's necessarily the headline that you necessarily want, or maybe it is, but there is this issue that right now there are a lot of people who think that there's so much pessimism, who hear all the bearish talk on this program elsewhere and are sick of it. And you're seeing that come into the commentary. You're seeing that in the options market, where you're seeing actually people putting on much less protection against the market dropping another 10%. What do you make of that?
It's a great question, Lisa. And I'm struck by a couple things. Number one, I think back to late 2008 into 2009. I think that feeling of capitulation was very different than this. I can remember not wanting to turn the screens on in the morning. I don't think we're quite there yet today. The second thing I would just note is be careful that, or at least distinguish between what people say they're doing with their money and what they're actually doing with their money. And I still think the gap between those two things is quite wide here. The flows, for example, are still pretty aggressive into both equities and bonds. I'm not sure that describes that cathartic or capitulative moment. We do have good seasonal support here for the next, call it 90 days. I want to be mindful of that. We have essentially oscillated between 3,600 and 3,800 for the better part of the last 6 weeks. I could get you to, let's call it 3,950, 4,000 on S&P, but then we have to deal with the very inconvenient fact that this is still a downtrend. And I think stocks rallying into downtrends are ultimately things that you want to fade down the road.
So there's a breaking point at some point that a lot of people foresee, yourself, Mike Wilson, and you did correctly call the yen going or weakening to 150 per dollar. How much is that going to be a potential catalyst? This question of what John called a bonfire of central bank foreign exchange reserves, how much is that going to be really the trigger?
Well, the language that we've used is very simply, the market is back in charge here. And I think we saw that in the UK over the last several weeks. I suspect we're going to learn that here in Japan over the next number of months. I mean, the story is, $30 billion of intervention. I think that's what the FT reports on Friday. So that's a 50% increase from the $20 billion of intervention that we saw, I think, on September 22nd. After the September intervention, it took 14 trading days for yen to make a new low. So that's kind of our benchmark here. Let's see where we stand in 2 weeks. Are we talking about 152 yen again? Are we talking about 135 yen? I think that's going to be how we judge whether or not this is successful. Because when I see German 10-year yields at 250 and U.S. 10s at 420, and I see Japanese 10s at 26 basis points or 25 basis points, there's a clear outlier here. And I think that's an unsustainable path for the BOJ to remain on.
You see the gap lower on that chart, Bramo. There's just smoke coming off the bottom of it. What is it, about $40 billion worth now? To Chris's point.
Love your comment.
Just ridiculous. I want to look at sterling as well, 113.18. Latest reporting from the team in the UK, Tom, that Rishi Sunak, the former Chancellor, is getting the public endorsements, and we've been tracking them here at Bloomberg News. We've verified public statements from 179 Tory MPs, so that's more than half of the Tory MPs now, Tom.
And this goes to 9 a.m. this morning, our time. What happens at 9 a.m., John?
Perhaps we get a Prime Minister,
They
a new
announce, they anoint the Queen.
Rishi Sunak,
the King
maybe.
stands
Well,
up.
you've got to change the language there,
Yeah,
Tom.
excuse
Now
me.
we've got the King as well, sure.
Yes, thank you.
Big changes, Chris. I don't want to linger on it too long. I think this market wants to move on and move on quickly. You mentioned that maybe we've had one scalp in Liz Truss. Where does the next one come from? Chris, can you elaborate on that a little bit more? Is that a change of leadership at the BOJ? That's set to take place anyway. What is it?
Well, I think that's a good place to start. We wrote something to the effect in, I think, February or March that the BOJ was going to have its 1992 BOE type event. And I didn't also think that the BOE would have another BOE 92 type event, but of course that's kind of what happened here over the last several weeks. So I do think ultimately this is heading towards some crescendo, and I think Japan is kind of ground zero for that. Now, also keep in mind, Tom, CNH this morning is at 730, 731, right? So the stresses that we've seen in the Chinese currency haven't abated here either. So I still have yen at 150, and I have Chinese at 730. I'm not sure that's the greatest environment for macro risk.
What is the technicals of the 10-year real yield now? We exploded out to 181. I'd call that catharsis. Yeah. You come back, but we set Chris Verrone above that 160 level. What's that chart look like?
Well, this is a little bit of a pet peeve, that this idea that real yields are actually positive. I guess theoretically they are positive if you're taking
but if you look at the 2-year
10-year yield versus 10-year break-evens. But if we look at like the actual policy rate, I mean, what the Fed funds rate is 3.25 and inflation's 8. So I think for all intents and purposes, for real people, the real interest rate is actually still quite negative. So I think there's more work to do here before the Fed really believes that short rates are offering a positive real yield.